Good afternoon. This is Tom Alexander. It is Sunday, September 4th. It is about 5:07 p.m. Eastern Time in beautiful Charleston, South Carolina. I hope you're enjoying your long weekend. We have a holiday on Monday here in the U.S., so we will have another day before the cash markets open, another day to play and rest. Hopefully you guys are playing and resting. That's what these holidays are for, right? Very interesting market setting up, as they usually are. Friday was a bizarro day. Now, there are numerous divergences that would point to a bullish resolution here. Very strong divergences. The technical situation is strongly pointing to a bullish outcome. Now, that said, if we can't rally off of this level, then the almost exact opposite inverse of that is going to occur, where we get an extreme downside washout that lasts 2-3 days. Now, regardless of this, my feeling is that we see a short-term low. Either we're going to know in an hour. My guess is that Globex is in an hour that opens up at 6 p.m. Eastern time will give us a good clue. So by the time the cash market begins trading on Tuesday, I expect a big gap up or down. I expect to get a big gap one way or the other. That's a little unfortunate that all this stuff set up on the Friday of a long U.S. weekend, and then we have Globex. But that's just the way it is. And it's another reason, and I talk about this with my clients, it's another reason to learn to trade different instruments in different time frames. This is a membership based primarily on short-term trading and heavily on day trading, but there are situations where you really are well served to understand how to swing trade, even if a swing trade to you is 2-3 days. Now, let's take a look at the charts here. And on my screen, you can see the 4 primary U.S. trading indices, the S&P, the NDX, the Dow, and the Russell. You can also see the reversal days on Friday. I'm going to highlight the S&P. The structure of all 4 is identical as we head into the Globex Open here in about 45 minutes or so. Now I'm going to go down in time frame. Let's go to a 30-minute chart. And you can see we gapped up and then started trading higher. Then there was news and traded basically straight lower. Now there is a minor buying tail here on the 30-minute cash chart. I'll also point out that there are minor divergences among and between the indices, and you will almost always at important swing highs and lows see divergences such as the ones that we're seeing now. We have the NDX and Russell cash markets that did not trade below Thursday's low. And I think the Dow did. Actually, neither did the S&P. Now, I'm not looking at the futures markets at the moment, but I tend to base especially longer term analysis off the cash charts. I'm not, we could look at that, but it's not relevant for practical purposes. What is relevant when the market opens on Tuesday, and again, unfortunately, we're gonna have Globex trade that begins tonight, carries through Monday, and then Monday around noon. I think this is correct. You can check with your broker. Monday around noon cuts off, then we start again in Globex on Monday evening, and then by Tuesday morning, there's all this trade that has occurred in Globex and the overseas markets that is going to have a dramatic effect on the opening. It's going to be a gap up or down. But anyway, my guess is we're going to see a bullish resolution here. But if I'm wrong, I'm going to be wrong big, and this thing is going to be down hard for 2 or 3 days. So what I'm looking for going into next week, I'm looking for Friday's highs to be exceeded and perhaps dramatically at some point during the week by all 4 of the indices, or some sort of dramatic selling that's climactic, and then we get some sort of big rally. The immediate levels are the recent lows, either the Thursday lows and the SPX, NDX, and Russell, or the Friday low, and the Dow, which is not far above its Thursday low. Okay, so let's take a look at, let me see what I wanted to show here. Let's do this. This is in the report this weekend. By the way, do me a favor. If you're finding value in these videos, please like them, please subscribe. Comments are welcome, questions are welcome. I will quickly answer your questions or reply to your comments if you have them. Okay. This is a weekly chart. This is the SPX. And you can see we're almost dead in the middle between the June low and the August high. So these levels are really important from an intermediate to longer term perspective. Now, we can have a very substantial decline to the low. That's 7.5%, and it's about the same to the upside. Well, it's a little bit more, 10%. So we're near the midpoint of this range. And I do think that we are setting up for an extremely sharp move next week, one way or the other, that may be the tell as to which of these extremes, this upper extreme or lower extreme, is tested. So we'll take that in real time, a step at a time. And I update this every single day for members. If you're interested in a membership, go to the website, alexandertrading.com. Okay, let's see. Now let's take a look at, well, we'll do this real quickly because it's short and sweet. There are times when the market profile graph can be very helpful. There are times when it is not very helpful. This is one of those times. All I can tell you is that the takeaway from this is the same as it is looking at the internals, the technical internals, or looking at just the bar charts and the market structure from the bar charts. A sharp move is imminent. Now, I think it's going to be up. That's a guess, and that's based on technicals. So let's cover that a little bit. Let me go to breadth. And the 10-day moving average of breadth is at a level from where we have had very, very sharp rallies. It is unusual to get this compressed on a 10-day moving average, NYSE advancing issues, and then see further hard selling. The only instance I can recall was back in 2020, and even then, when you got down, this moving average reached an extreme, and it coincided with an extreme in breadth, a negative 2,000 reading, we would get rally. So I do think, there's strong evidence that if this wasn't a low or very close to it, a substantial low, that we're going to get super hard selling, and that will just put this in the mother of all extremes. Breadth will be negative 2,000 again, and then you'll get some sort of 5-6% plus rally. But that rally may not occur until we test the June lows. So that's where we are from an internal perspective, looking at this NYSE data that I look at. I look at advancing issues. I do look at the advancing and declining volume, but it is almost always the same signature as the advancing issues. Okay, let's look at VIX. Let me find, here we go. All right, here's VIX. Now I'm going to make this a histogram like I put in the written report that hopefully all of you have. If you're not getting the written report, send me an email. It's free, tom@alexandertrading.com. I'll put you on the list and you'll get the report. And I'll send you this one. Okay, let's see here. Got to make this a histogram. And you can see we made lower from beginning on the 29th. Following the 29th, we went lower for 3 consecutive days with lower closes each day, and VIX declined. Now, like a lot of technical stuff, you can't rote trade it. It just gives you a heads up. It gives you a clue. It shows you when something is acting quote unquote normal or abnormal, and it's just a heads up. But it, with VIX and breadth and the market structure, the minor divergence that we have with the Dow trading to a new low and the others not, that's bullish. You know, it is bullish. Now, because we're in the middle of nowhere here, looking at the bar chart, the S&P, because we're in the middle of nowhere, there's no objective support below this level from an auction market perspective. What do I mean by an auction market perspective? Well, from trade among and between buyers and sellers. There are no, you know, you can play the magic number game, which I don't play. Actually, I put a thing in the report last week, and it's in, I left it in the report this week. You can see their levels, broad levels down in here. That's just a guess using a measured move type of thing, but none of the fib stuff. But the most important level to the downside is really the June lows. Now we could, and I've been saying this since up here, we could stop anywhere in here. Nobody knows. However, the technical condition of the market says that this is a real candidate for a low. So we're going to find out, I think, very quickly, probably in Globex in 45 minutes, 30 minutes or so. So we'll see what happens then. Now, there are two other markets that I don't typically cover in the weekend report. I do talk about them during the week. I do trade them actively. I do encourage traders to trade them, even day trade them, especially crude. Crude is a wonderful day trading market. If I had to trade one market and only one market intraday, would be crude. Okay, so that's my rant about that. Here is crude. This is a weekly chart of crude, and crude is truly at the edge of the abyss. If crude goes much lower, it is likely to accelerate lower, and it could accelerate lower $20 quickly. That would be quite a shock to several current narratives. On the other hand, what this is, crude is at an inflection point. So if it begins to show upside conviction, you don't want to fight that either. But the conviction over the last week, over the last few days, has been down. That's just objective information. That's not a guess, supposition, an assumption, macro, that's a fact. Okay, let's take a look at gold. Gold is in a very similar position. And here's a weekly chart of gold. Now, gold is a little bit off of this level, but if this 1677, 78 area comes out, there is nothing really substantial until you get down to around this 1450 level. So those are two markets that I would encourage you to watch in addition to the stock indices next week. And it sort of makes sense. All three are at inflection points from where you're expecting a sharp move. And when you have a sharp move in one of these contracts, you tend to have a sharp move in all three of them. So that's another reason to be watching and alert for that sharp move. You guys enjoy the rest of your holiday weekend, those of you that live in the US. I will see all of you on Tuesday. Talk to you later. Thank you.